Last week I shared a few of the things I learned from being at the self-storage convention in Las Vegas a few weeks ago. Today I'd like to share with you some of the things that our company may be doing differently as a result of that. My name's Mark Helm, and I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Quick Start Academy. And what I do is I support the small investor who wants to get in the self-storage business or who wants to grow their self-storage business, strategically do so in a way that creates true wealth and a fulfilling career. And let me share with you some of the things that our storage company may be doing different as a result of attending these conventions. In today's world, it's critical that as owners, we stay up on what's going on with the industry and the best practices for operating our business. One thing we're looking at, and the verdict isn't in yet, but one thing we're looking at is having like a type of self-funded tenant insurance program. We ran into a vendor that helps smaller companies, not real little companies, but maybe medium-sized companies. Basically, you have to have over 1,000 units to make it start looking economically affordable. But there's a lot of people with that size portfolio or that size project. But self-funding the tenant insurance portion. The verdict's still out. We don't know if we'll do it. We're looking seriously at it, comparing the pros and the cons. But the last statistic I saw was one of the publicly traded REITs in 2017 made over $13 million with their tenant insurance program. And we're looking at ways to add additional revenue to the net operating income line, given that we don't think we're going to be having the price increases we've experienced over the past few years. So that's one thing we're looking seriously at doing as a result of being there. I didn't even know that was a potential option. Another thing that I learned that we're going to start doing a little differently, or something we're going to be measuring a little differently, revolves around customer service. Now, every company, every self-storage company, every third-party management company says that they have great customer service. We do too. In the past, how we've measured our great customer service is by the percentage of referrals that we get. We track where all the new leases come from, and usually referrals are number one or number two in the volume of new leases that are generated at the facilities. Each facility is a little bit different, but we've been averaging in the high 20s, low 30s% of new customers coming from referrals from existing customers or old customers. Now, we attribute that to the good customer service and the positive experience that our customers or past customers have. However, at the convention, in one of the talks by the owner of a company more successful than we are, larger than we are, they've grown way over 100 facilities, is they said good customer service is how fast can a person move into your facility. That's how they measure good customer service, the speed at which a prospect can rent a unit from you. As a result, this company is spending over $1 million upgrading their website because they saw that their website takes 13 seconds to load. And they know, and we know, that if a website takes that long to load up, you're going to lose a significant portion of your customers. Now, I don't see us doing anything as drastic as spending $1 million on a website. And I have periodically gone through the customer journey to see the experience that a customer would have at our facilities. But I've never created a benchmark or a key performance indicator called how fast can a customer move in. That might look like how many clicks does it take to reserve or rent a unit online? How many pushes of a button at a kiosk does it take to get a code, pay your bill, and be able to enter the premises. It might look like, how many questions does the manager ask or is on the questionnaire form when someone's in the office moving in, so we can get this data of where our new tenants come from. Is it easier online to buy an airplane ticket than it is to reserve a unit at our storage company? Is it easier to rent a hotel room at the convention I just came from than it is to rent a unit at our storage facility? These are the kind of things that we're going to be looking at and creating some kind of measurement for in the future. A direct result of being at this convention. But probably one of the biggest aha I got from being at the convention revolved around strategic pricing strategies. Now, as a small storage owner, we prided ourselves on how fast and how well we've implemented new strategies. We, for example, do value pricing. We've made a conscious decision not to employ demand pricing, but we thought about it and we reviewed it and we looked at the pros and the cons. And we're actually using the fact we don't do demand pricing as a differentiator between us and some of the larger players in our markets, and we actually use that in some of our marketing material. But I realized that my beliefs, my thoughts about what a well-run facility looks like literally could have been something that's been holding us back from experiencing even more revenue. What I realized at this convention, and I didn't even realize this was my belief system or it operated like a belief system, but I realized being there that in my world, my view of the world, my view of this business is that in a perfectly run facility, everyone would be paying the street rate. Yes, I do not like it when someone is paying for a 10 by 10 under what the street rate is. But that belief system really got challenged. Why is it that some people shouldn't pay more than the street rate for a 10 by 10? Yes, we have units that are closer to the office or closer to the gate that we've said we charge more for. Not all 10 by 10s or 5 by 5s are created equal. But that has been a unit-centric way of creating value pricing. What about a customer-centric way of creating value pricing? This never really crossed my mind. Besides the concept that not all units are created equal, perhaps not all customers are created equal. What I learned at this convention was, for example, the longer a customer stays at a facility, the more willing they are to pay higher prices. People who have been there over a year are 20% more likely to absorb a price increase. People who are on auto pay are 50% more likely to be long-term tenants. Long-term tenants are willing to pay more and absorb price increases. What if, after a certain length of time, people who are on auto pay start getting price increases, regardless of what the street rate is, regardless of where their unit is? What would that look like? What would it look like if a customer has had a complaint or a negative experience, we don't pass the price increase through? And if they've had a positive or good experience or have referred to us, we do pass the price increase through. Now, I don't know what we're going to do, but we are really exploring, one, our beliefs around customer-centric value pricing, and two, what it might look like at our facility. I had to really question my belief about people paying street rate and not necessarily above it based on how long they've been there or a customer-centric profile. If I ask myself the question, should some customers, let's say who've been there over a year, pay more for a unit than someone that hasn't? Well, the first answer I came up with was, well, that's not fair. But then I realized that I'm the one, or our team is the one that came up with the street rate in the first place. We looked at the market and came up with a number, but in reality, our street rental rate is an arbitrary number. We just said it's this. We could have said it was something else. And why should some customers not pay more than that, especially if they're willing to? People vote with their wallets. I don't know what's going to happen from this, but we're really looking hard at what some of the possibilities are for new strategic pricing strategies and what that could look like in our portfolio. But I would never be questioning any of this had I not attended that storage convention. Another thing I got real clear on was that you bonus managers based on the activities you want them to put their attention on. So for example, if we decide we're going to really focus on, let's say, a customer-centric value pricing strategy, then one thing that's very important to us would be, are they on auto pay or not? Perhaps we start bonusing the managers based on whether they're on auto pay. Or if we're trying to take the tenant insurance from 20% up to 60% of our customers purchasing tenant insurance, then we'll start bonusing based on that. Now that might sound obvious, but we haven't always created bonuses that way. But we're looking at all of our bonus structures, and they could be different for different managers depending on where that particular facility is, but we're going to be crystal clear if our bonus structure is a function of what we want that manager to have their attention on at this particular moment of that facility's growth. Now, anytime I can go to a business convention and start questioning some of my core beliefs about life or about how a business should be run, that was a convention worth attending. I suggest as business owners, it's our responsibility. We don't necessarily have to go to every convention, but it's important to stay up on what the industry's doing. In the old days, 10 years ago, or my first incarnation into the storage business, I used to tell people that this was a pretty boring business. Like the last great innovation in this industry was creating climate control units. I don't say that anymore. This industry's evolving and changing and becoming very sophisticated very fast. And if we're not staying up on the new trends, and if we're not willing to experiment and try new things, we're quickly going to become irrelevant. So part of my mission in these videos is to close the gap on how smaller investors and the larger investors run their storage companies. And almost everything I've learned about new procedures and new ways of doing business have come from attending those conventions, and even attending conventions of other businesses and other industries. You can learn a lot from that too. So I hope this has helped. Maybe you can start looking at your storage business and asking some new type questions. And if you're getting in the business, when you're getting ready to open and put your first project into service, these are some very good questions to be asking yourself. So thank you very much. I look forward to being with you next week. And next week we're going to start a Getting Started in the Business series. We're going to go to some of the very basics of getting started in the self-storage business today, but inside the background of this new self-storage landscape that we have now. I'll see you then. Thank you very much.